This content is for educational purposes only and is not financial advice. Any results shown are illustrative, not a promise or guarantee of similar outcomes, and individual results vary. Options trading involves high risk of loss.
Hello, in today's video we're going to be taking a look at the July 1st, 2026 trading session for the SPX CBOE index. We're utilizing two indicators from Day Trading GPS. The first one is the SPX Daily Key Levels V3.0 indicator. The second one is our newest version of our Ribbon indicator, which was just released a few days ago, the Ribbon V3.0 Multi-Reset Edition for multi-session resets for indexes, stocks, ETFs, futures, Forex, in any global market. Okay, so in this video, what we're going to do today is something a little bit different than our normal video. We've had quite a few traders write us asking us about chart time frame. So if you've seen our other videos, we typically show the 2-minute chart time frame on our SPX videos. That is what our recommended chart time frame is. However, the recommended chart time frames in general are anywhere from 1 minute up to 5 minutes. So a lot of traders have written us that they wanted to see charts with 1 minute and 5 minute as opposed to the 2 minute, and how our indicator works on those chart time frames. So in today's session, that's what we're going to look at. We're going to look at a 1 minute chart time frame and 5 minute chart time frame, and you'll see the process is exactly the same as with the 2 minute chart time frame. All we're simply doing is changing the chart time frame. So with this indicator, what you're looking for is you're looking for an entry that is going to be a bullish entry if we get a candle close above a main key level or a contextual level, and then we are looking for confirmation of the entry with the ribbon indicator. So we're looking for two things to actually get into a trade. Now, the main key levels with this indicator are the bull bear key price level, which for today is 74.7536. The other main key levels are the R1 through R6 levels and the S1 through S6 levels. So if you look here, if we zoom out by taking our mouse and going over to the left, the right price axis, holding the mouse left click down, holding it, and then pulling the chart down, then you can see R1 through R6 and S1 through S6. However, at the beginning of the session, you don't want to do that. You want to have your chart on somewhere between R3 to S3 or R2 to S2, and that's because 80-85% of the sessions in a normal year, in a normal volatility environment, are going to range between a 2-level extension above and below the daily bull bear KPL level, and that is going to be R2 down to S2. So you do the same thing, left click on the right price axis, hold the mouse click down, and expand your chart R2 down to S2. Or you can do R3 down to S3, your choice. The contextual levels are the PMH pre-market high, PML pre-market low, YDL yesterday's daily low, YDH yesterday's daily high, and YDC yesterday's daily close. All these Y levels are the RTH session high, low, and close. PML and PMH are the current session's pre-market high and pre-market low. Your QL levels and your midpoint levels are used primarily for stop loss purposes, although the midpoint levels are also used for gauging momentum on trending moves and also for targets. Primarily targets with regular trades as opposed to scalp trades, as we'll get into in a second. So again, what you're looking for on a bullish entry, a candle close above a main key level or a contextual key level, and then you, in order to confirm the entry on that close above or close below, you are looking for ribbon confirmation. Ribbon confirmation means on a bullish entry, You have the close above the main or contextual level. At the same time on that candle close, the ribbon must be all green, and ideally what you're looking for is the upper bands of the all green ribbon to be pulling away from the base of the ribbon, such is the case here. Pulling away from the base. Pulling away from the base. Now here we have a close above the PML level. So this would be a bullish trade above the PML level if you want to take that. Here it's close above the bull bear KPL. If you're waiting till later on in the session, then we have close above YDC and R1 here, with also the upper bands pulling away. Now, on a bearish trade, you're looking for the opposite. You're looking for a close below a main key level or contextual level. So here we have a close below PML. It's also a close below the bull bear KPL. Just really depends on which one you want to base the trade on, because that determines where the stop losses are going to be. And as you can see here on this 1 minute chart, we have the lower bands of the ribbon pulling away from the base on these, not on the opening candle, but on these succeeding candles. If you're taking a bullish or bearish trade off a contextual level, then the stop losses and take profit are in the user control panel. So you simply go down to that section. Stop loss and take profit levels for the contextual levels, PML, PMH, YDL, YDH, YDC. Starts off with bullish entry stop loss and take profit levels. You can choose between standard SL or tight SL. Then you can also, under that, select the take profit for the PML. Now, you don't necessarily have to use the built-in take profit to generate that. You can also use key levels that are already on the screen, but if you do that, if you prefer it this way, and you want to get exact about the reward risk multiplier, you can use this here. The default is 2 to 1. You can either move down in 0.25 increments or up in 2.25 increments. You can go all the way up to 30 or all the way down to 0.25. The default is 2. Once you do that, as an example, we can just put on here, if we wanted to do, let's say, a PML on a bearish, go down to the bearish section, enable bearish entry stop loss. We'll go with the tight stop loss and bearish entry take profit. We'll go back up here and put the line label text size. We'll increase it to large so it's a little easier to see. As you can see here, we'll move these a little more so they're easier to read on the offset here. Here's the offset. We'll move it more to the left. We'll go minus 20. Okay, so if you're basing it on the PML level here, here's your tight stop loss, this level here. You can increase the line if you want. It has its own line settings for that. So you simply go back down. Let's increase the line width to say 3. Okay, you can also change the colors of these if you prefer a different color. The default is it's going to be the same color as the level that you're basing the trade on, in this case the PML. So here's the bearish tight stop loss. That's what TI stands for. If it was standard, it would say STD. And here's to take profit. So you can see on a 2-to-1 reward to risk, here's the take profit. That's the default. So as you can see here, it hits that. That's if you're going to base it on the PML. If you were basing it on the bull bear key price level, this is still within the acceptable range for these candle closes here on the bull bear KPL. So if you instead wanted to do that, your tight stop loss and your standard stop loss are the other key levels here. So you don't have to go into the user control panel for that. Your QL above is your tight stop loss, and your midpoint above is the standard stop loss. On a bullish trade, it would be the exact opposite. QL below and midpoint below for a bullish trade off the bull bear KPL. Works the same way off the other key levels. For example, a bullish trade off of R1, QL below R1, which you just simply go into the user control panel. You can set more defaults if you want to have these displayed on startup. You don't have to fool around with enabling these. You can enable them and set them as a default to begin with if you prefer that. QL below R1, that would be your tight stop loss, the bullish trade R1. Midpoint below, standard stop loss. On a bearish trade on R1, then it's just this reverse. QL above R1 or midpoint above R1 as an example. Works the same way on all the other main key levels. Contextual levels, you go into the user control panel to do the stop loss on those. Now, as I said, you don't necessarily have to use the take profit. You could simply just say, I'm going to get out at S1 as an example, as your target. However, it is good to at least see where a 2-to-1 is as an example. So you can say, okay, fine, I'll agree with that. That looks fine. Or if you want to increase it to hit YDL, then you would increase the risk reward, and then you can judge that risk reward for hitting YDL or S2 or whatever level that you want. So you don't necessarily have to use this. The thing you have to use is a stop loss. You don't have to use a take profit. If you just want to use specific levels for the take profit, that's fine. You could even put the midpoint levels on for S1, S2, etc. Okay, so as we've seen here, we do have this opening trade here. Now we'll go off and we will go ahead and turn off the PML, PMH here. Okay, so if you were doing the bull bear key price level, QL above or midpoint above, stop loss. As far as targets on regular and scalp trades off of main key levels, bull bear KPL R1 through R6 or S1 through S6, a regular scalp only trade is a one level target calculated from the level the trade is based on. So a bearish trade based on the bull bear KPL, S1 is the regular target for a regular scalp trade. For a regular day trade, a 1.5 level move, so it'd be mid S1, S2. Regular trade minimum ideal move, a 2-level move, that would be S2 on a bearish trade from here. But the minimum is going to be on a regular scalp, S1, 1-level move. Now we also have a micro scalp. A micro scalp means a contextual level that is enough space away from your entry on the level that you're taking the trade on that occurs before the 1-level move. Now in this case, the only contextual level that's before S1 on a bearish move is the PML. However, as you can see here, whether you're entering on the second candle here, that is just too close. So if the PML was, say, down here, further away, that would be fine. That could be a micro scalp target. As you can see on this third candle here, we've already hit PML, so that negates that. So in either case, you're looking for a contextual level that is far enough away from the entry, however, it still occurs before the one level move. Now, in either case, whether you're doing a micro scalp, a regular day trade 1.5 level move, or a 2 level move, you have 3 different options when it hits that initial target. One is 100% exit of all your positions. You're just simply closing out for profit, exiting the trade, and the trade is over with. The second option is to adjust your stop loss to break even. Adjusting your stop loss to break even does not mean moving it down to the level that you were basing the trade on. What that means at that point is that you are moving your stop loss to the executed price that you paid for the option, or you're adding an additional amount on top of the price you paid as a profit buffer. The third option is a combination of those two, and it applies if you're trading 3 or more contracts. So if you're trading 3 or more contracts, then at the initial target, micro scalp, regular day trade 1.5 level move, or regular day trade ideal 2 level move, you are exiting and closing out 60 to 90% of your original position, taking your profit. Then on the remaining runners that you have left over, on those you are adjusting your stop loss to break even, the price, executed price you paid for the option, or break even plus a additional profit buffer. Then on that case, what you're trying to do is you're trying to see if the move is going to continue, and then as it moves down to further key levels past that initial target, whether those levels are contextual levels, midpoint levels, or main key levels, at each one of those hits that are further in your favor after the initial target, then you make a decision as to closing out some or all of your runners that you adjusted the stop loss on, or further adjusting the stop loss more in your favor by adding more of a profit buffer, or closing out some of your remaining runners and then adjusting your stop loss on the remaining. It just really all depends on how many you start with. For example, if you start with 3, you'd be closing out 2 at the initial target. That's 66%. If you were trading 4 and you closed out 3, that's 60%. Trading 4 closed out, if you were trading 4 and closed out 3, that's 75%. If you were trading 5 and closed out 3, that's 60%. Trading 5 and closing out 4 is 80%. Trading 10, then closing out 6 is 60%, closing out 7, 70%, closing out 8, 80%, closing out 9, 90%. The general idea is 3 or more contracts, closing out 60 to 90%, the majority of your position, when it hits the initial target that you've decided on, either micro scalp, regular scalp 1 level move, regular trade 1.5 level move, or regular trade 2 level ideal minimum move. Okay, so as you can see here, a 1 level move from SPX Bull Bear KPL down to S1 is a 1 level move. So we have a hit of that. That would be your scalp. So for example, you're either exiting, adjusting your stop loss to break even or break even plus a profit buffer, or closing out 60 to 90%, and then adjusting your stop loss to break even or break even plus an additional profit buffer on this hit. If you didn't close out everything and you still had positions left with the stop loss moving to break even, then of course you would have eventually gotten stopped out on any remaining runners that had that adjusted stop loss. That's why it's prudent to either exit 100%, in most cases doing what option 1 is, exiting 100%, or number 3, which applies to 3 or more contracts, closing out 60 to 90%. So you would have closed out 60 to 90% here, had the remaining runners at stop loss at break even or better. Then when those got stopped out, you still have the 60 to 90% profit from here. Whether you want to use the micro scalp, the regular scalp 1-level move, or the 1.5 level move, or the 2-level move is really just up to every trader through practice. So you may feel more comfortable doing scalps, 1-level moves, then doing adjustments off those one-level moves by closing out 60 to 90%, and then adjusting your stop loss on remaining runners. That way you're extracting profit early. 1-level move, you're extracting out most of the profit from the original position. And then you're just dealing with remaining runners. If it doesn't work out and those get stopped out, it's not the end of the world because you still closed out 60 to 90% at the 1-level move. Whether you want to use the 1-level move, the micro scalp move, or the 1.5 level minimum threshold for regular trade, or two level minimum ideal move, this comes basically with practice and use of the way that you prefer to trade, and that's up for each trader to decide for themselves with this indicator. Okay, so what about after that? After that, then you have this move here. Now, that would be a bullish trade off of PML here, or waiting for a bull bear KPL close above. You have close above here, ribbon separating from the base. So you have ribbon separating from the base here for the PML trade. You also have ribbon separating from the base here, all green ribbon in both cases. Candle closes above, contextual level here, bull bear key price level here. Same thing, bull bear key price level, basing the trade on that. QL below, stop loss, and a bullish trade from that is the tight stop loss, midpoint below standard stop loss. PML, like I said, you just go into the user control panel, select standard or tight stop loss for PML bullish trade, along with your take profit, or just simply use key levels already on the chart for the take profit target. As you can see here, we do get a 2-level move on this particular move. So if you were doing, let's say off the bull bear KPL, you have a hit of the R1, 1-level scalp. Mid R1, R2 is the 1.5 level. And then we have the R2, the 2-level. And as you can see here, 2-level extension, and price basically peters out here. Now we'll take a look at the 5-minute chart. Okay, so as you can see on a 5-minute chart, we have a different look here. We have our ribbon reset on, just like we did on the other chart. So the other chart, we had our ribbon reset on for 9:30 RTH. That resets the ribbon, giving us a clean look. You can use the ribbon with the filter on or filter off. You can also do a dual screen setup where you have one screen with the filter on and one screen with the ribbon filter, reset filter off. You can either wait for dual confirmation from both ribbons, filter on and filter off, or you can just decide which one that you prefer to go with. Of course, that also again comes with use and practice as to which method you may prefer. Using the single ribbon, just set one way, filter on or filter off. Using a dual screen method, either on 2 monitors, or if you only have a single monitor, then a dual screen left and right side setup. Either for purposes of just seeing both ribbons and then making your decision, not necessarily waiting for dual confirmation from both, or that you want to be more conservative and wait for dual confirmation from both. So that's up to you. Okay, so on a 5-minute chart, you can see here, there is no bearish opportunity on a 5-minute chart, but the process is still the same. Here you have no red ribbon here on this reset, and you're starting to get the pull away here on this third 5-minute candle. You could have even gone with this second candle here because, again, we still have the pull away from the base. Just depends which level that you want to base your trade on. If you're basing it on S1, a bullish trade, then you just simply go into the user control panel. If you want to use either the midpoint or the QL, so say midpoint, mid S1, S2. Again, you can turn all these on to begin with. You don't have to turn them on after the fact. You can turn them on to begin with before the session, and you can save them as a default if you prefer that. We just have a minimal amount of them that turn on as far as the QL levels and midpoint levels as far as the default display. However, you can change the default display to your liking and then save it. QL below S1 is your bullish entry touch stop loss. Mid S1, S2, midpoint below S1 is your standard stop loss, bullish trade from S1. If you're waiting here, you had a bull bear key price level opportunity here. So if you didn't catch this, your next opportunity, bull bear KPL on this 5-minute chart, close above, all green ribbon, upper bands of the ribbon pulling away from the base. As you can see here on this, the QL below, that would be your touch stop loss. Midpoint below, bull bear KPL, standard stop loss. One level move to R1. PMH here, opportunity for micro scalp, although preferably it would be not as close as this, but if you get the general idea, if PMH was more towards R1, this is about minimum adequacy here as far as being away for micro scalp. R1, that's the scalp. Mid R1, R2, that's 1.5 levels away. R2, 2 levels away. As you can see, we get a hit of the R2 here. So it hits R1, mid R1, R2, then R2. Then we get the fall away from R2. So as you can see, it doesn't really matter what chart time frame you're on. The chart time frames, as we said, are 1 minute up to 5 minute. If you prefer a 5-minute chart, that's fine. Same process. Here, this is a good session because you see a completely different look. A 5-minute chart, there is no bearish opportunity. There's only a bullish opportunity to start with. However, that bullish opportunity starts off the S1 level, and you could even do one off the PML level or the bull bear KPL level. Now, if you had the filter off, then you're going to see a completely different look here. Filter off, you're getting the hangover effect. So as you can see here, on a 5-minute chart, if you're thinking, oh, with a standard ribbon, and most of the ribbons out there are just like this. So basically, this creates a problem on symbols that gap frequently, such as indexes where there is no overnight or pre-market trading. Same thing happens in futures at the 6 p.m. Globex Open every day because there is a period between 5 p.m. Eastern and 6 p.m. Eastern where the market is closed. And a lot of times there are things that happen after the 4 p.m. close with earnings coming out or other news. And there could be a significant gap up or gap down to start the 6 p.m. Globex overnight session. So same thing with the reset there. That's why this ribbon indicator, our newest version, has resets for all different asset types. It also has custom resets for international. If you trade international markets that have different times than US, simply go down there. You can just set a custom thing. You can name it whatever you want. You go in and select your market region. You select the time reset hour for that particular market region. You have up to 4 custom ones for that. Same thing happens with stocks and ETFs at the 4 a.m. pre-market open. From the post-market session the night before, closing down at 8 p.m., then you have the pre-market open at 4 a.m. Same thing happens in Forex. Friday, 5 p.m. close, Friday afternoon close. Forex is closed over the weekend. And then you have the Sunday 5 p.m. Eastern open for the Sydney session. So you can get a significant gap up or gap down there. Stuff like crypto that trades 24/7, then standard ribbon is what you're going to use because there are no gaps. Even though there are sessions, it does trade 24/7, so it trades continuously. However, all other asset types are not like that. So you can see here, wrong read. 5-minute chart, if you got a bearish thing on this candle, instantly stopped out. Then you're also getting in late here on the up move. So you're getting it both ways here. You have the reset on. You're seeing clearly right off the bat, there is no bearish opportunity. There is no red ribbon. We're just getting a reversal move right off the bat, even though the first candle was a pretty large down candle on the 5-minute chart. Okay, so that's going to wrap it up for today's video. If you are interested in the SPX Daily Key Levels Indicator, you can buy it one of two ways, either by itself, or you can buy it in the SPX Suite, which also includes the Ribbon V3.0, which you can use obviously on SPX. You can also use it on other types of symbols as well. And it also includes our SPX VWAP. I'll just show you that real quickly. You may be wondering, well, VWAP, doesn't TradingView already have VWAP built in? Why would I need your VWAP? And that's because on TradingView, if you're trading SPX CBOE, now SPX CBOE is the official SPX index from CBOE. So that is the official regular SPX index. Or the XSP, which is the official mini SPX index. So XSP on the CBOE. So we'll take a look at that now. Okay, so let's just go into indicators. We'll go down to built-in TradingView technicals. We go down to volume weighted average price, which is VWAP. And we'll try the other one, VWAP auto anchored. As you can see here, there's red exclamation points. No volume data, no volume data. There is no VWAP on the chart. It's not a TradingView issue. It is a global feed issue from CBOE. The global data feed that TradingView gets from CBOE does not include volume data. And of course, for a VWAP, volume weighted average price, you need to have the volume data. So now we'll look at our VWAP. Okay, the VWAP here is the blue line, and the other lines above and below are the bands. So this is our VWAP here. Our VWAP is designed with an external data source for institutional grade volume data for SPX. So ours is able to be on your SPX or XSP chart. Now you can go in here, you can change for example, the line width on the VWAP, you can change the color. The reason it's blue to start out with is you don't want it to be the same color as the thick yellow bands in the ribbon. Now with the bands, you can increase the line width or change the style. You can change the color as well. You can also change the anchor period with session, or make it, if you want to look at a longer period chart for some other views of SPX and a longer period chart, you can change that as well. Okay, so our VWAP for SPX, which works on SPX and XSP, is included in the SPX Suite. So the SPX Suite, you get 3 indicators: Daily Key Levels V3.0, the Ribbon V3.0, and also the VWAP. Whereas with the you could just buy the individual Daily Key Levels V3.0 indicator by itself, or you can buy buy everything together as one package. So we do have promo codes for both. If you email us at daytradinggps@gmail.com, just simply tell us if you want a promo code for SPX Daily Key Levels by itself, or for the SPX Suite, or if you just want to get both of them and then decide after that which one you want to get. You can also buy the VWAP by itself and the Ribbon by itself, or you can buy them together as a bundle. So if you, for some reason, don't want the Daily Key Levels indicator and just want to get the Ribbon and the VWAP, those are available as well. The best value is to get all 3 in the SPX Suite. However, we know everyone has different needs, so we have a flexible setup where you can just simply buy SPX Daily Key Levels by itself, VWAP by itself, Ribbon by itself, or you can buy all 3. The normal price for all 3 is a better deal than buying them all separately, but then, as I said, we currently offer a discount promo code for a substantial discount on both the individual indicators and the suite. So simply email us again at daytradinggps@gmail.com to request a discount promo code. Now what we'd like to do to end the video is, for those of you who may be wondering, well, this looks great and everything, but how is this working for people that have already bought these indicators and use them on a daily basis? I want to hear from them. I want to see, how this is working for other people. So what we're going to show you here at the end is screenshots of various reviews and feedback that traders have left us on our WAP.com website, on WAP.com. So that's at WAP.com/daytradinggps. So that's where our store is. WAP.com/daytradinggps. If you go there, you'll see all of our different indicators for stocks, ETFs, futures, Forex, NASDAQ, NDX, stocks and ETFs, as well as our individual indicators and all of our different suites that we offer. All right, so thank you again for watching today's video. If you found it helpful, please hit the like button. If you would like to be notified when we post other videos on any trading topic, please hit the subscribe button and you'll be notified. And now we'll show you the reviews. Again, we thank you. If you want to see the reviews directly on the site, again, just go to WHOP.com, that's WAP.com/daytradinggps, and then you can look at the reviews for yourself, or we'll show you screenshots from some of them now. Thank you again for watching, and we wish you much prosperity in all your future trading.
For those interested in seeing how other traders are using the indicators and the daily key levels trading framework, here are some reviews and feedback we have received from customers who have purchased and used the indicators. While individual results will always vary based on experience, risk management, and execution, These reviews provide insight into how traders are incorporating the daily key levels indicators into their own trading processes. You can view additional customer reviews and feedback at daytradinggps.com. Thank you.